Russia is still working on its response to the price cap introduced by Western countries, and that this uncertainty is weighing on the commodities market. Oil traders fear that Russia will completely ban crude exports to countries that supported the price limit, including those intermediaries. Surprisingly, these worries are pushing the oil quotes down. However, the price may unexpectedly reverse to the upside at any moment. Everything will depend on the response prepared by Russia. As soon as it announces its final decision, oil will start to appreciate, but the score of its rise is not clear yet. At the same time, oil's upside potential will be limited by worries over the global recession. In the United States, top managers of large corporations have voiced concern over a recession coming next year due to aggressive rate hikes by the U.S. Federal Reserve. Looking at the chart, we can see that Brent futures have lost around 12% since the start of the week. In fact, we observe a continued fall in the price of oil, even though the asset has been largely oversold recently. If oil keeps depreciating at the current pace, it may soon reach the support level of $70 per barrel. Traders may add more short positions as soon as the quote settles firmly below the mark of 75. In the meantime, the ruble remains under pressure while it's waiting for a response from the Russian authorities to the introduced price cap. The US dollar is still trading above 62 rubles. At the same time, in after-hours trading, the greenback hasn't gone below 61 rubles for the second day in a row. 2 days before this, the dollar-ruble pair slipped below the level of 60 rubles per dollar. More pressure on the ruble is coming from the Russian inflation data, which is expected to slow down to 12.2% from 12.6%. This means that the Central Bank of Russia may pause the easing of the monetary policy, which is traditionally a negative factor for the national currency. Market participants are also waiting for the inflation report from the United States. Today, we expect the release of the Producer Price Index, while the data on the Consumer Price Index will be out next Wednesday. Meanwhile, the downbeat data from the U.S. labor market allowed gold to rise to $1,800 per troy ounce. The precious metal may move even higher today if supported by the PPI data, which is projected to decline to 7.3% from 8%. This may serve as a strong indication that the Fed will raise its funds rate by just 50 basis points next week. If so, gold may head for the target of $1,850 per troy ounce. And that's all for now. We wish you profitable deals. See our channel with a new video in a couple of hours.